previous week, I was expecting a pullback, or I was hoping for a pullback from to Bitcoin all the way down to the. I've been calling for 80,000 potentially for a while now. The weekly trade for last week was what was it, 91.8. So that's where we were hoping to get the pullback to. We didn't get there. We only got we got near it, but not anywhere close that considers it mitigated. And we certainly didn't get to the 84.6 level from the week before, or the 80,000 from the week before that. So the weekly trades have been a wash. But remember, I've been saying this entire time, we're in this bull run right now. Right. So the idea, we were used to it in the consolidation range for the price to move through all these different levels. But when the liquidity hits in, and that's what we're writing, we got to expect that the price is just going to keep rising up and up and up. Now, it actually moved up higher than I thought it would, but not higher than like where we said it could be. So last week when we were talking about the price move up, we were saying that these levels here, this level here at 96.6 and then the level here at 97.6 were still in play. Right. So we did actually move up to those levels right there for the following week. So our levels are working. The indicators are working the way they're supposed to. They're letting you know where the price is likely to go. Now, the next level up after that was at 104. I actually didn't really pay attention to this 104 level. I didn't see it, but the price went straight up over there. So just keep in mind that when the price moves, like, it's not a mystery where it moves to. Right. If we get an unmitigated level for VWAP, chances are that's where the price is going to settle. And now we have all we have now is like all-time highs, and then there's no other levels to look for at the top. So when I was looking for the 10-15% correction down over here, that's because I didn't actually pay attention to this level that was at the top. I didn't know that the price could still be pulled there. Right, so that's on me. I'm not perfect. I'll make these tools better and better and better, but that's just what we have to live with. You can rest comfortably in the knowledge that the indicators are right.
That's what I was about to ask. If you had the indicators, you would have been able to see it.
Well, it's not perfect. So what happens is that there's only a certain amount of lines that could show up on the chart, because it's showing levels all the way back to wherever. So what happened over here is that this line actually only showed up once the price crossed it. So when we're over here, a little bit further back. Oh no, it was actually there. I just didn't see it. Especially since it's a daily line, I don't generally chase daily lines. I only really deal with them when they're nearby a weekly level that I'm looking at. That's when I really pay attention to it. But I should pat myself on the back. The indicator did show it to me. I just didn't surface it in our conversations, especially since it was so far away from this level over here. I just wasn't anticipating for it to go all the way back up, but it did.
Right.
But now we definitely have no more levels at the top over here. We have trend lines, but we have no more VWAP levels at the top, which means the propensities for the price to move to the downside if it's searching for liquidity. But if we take a look at the global liquidity chart, we're noticing that we're on this trajectory, on this rise up that we were talking about ever since 74, that we're going to rise up basically till July, where we'll have this consolidation range for at least a month, which I think might be a topping maneuver, and then we'll actually fall. We'll see. But essentially, this is what we're looking at right now, where if we're going to fall, like, now we have an even higher likelihood of falling down, and we could again fall all the way down to this 80,000 level, which is 25% down. Totally possible.
Eesh.
Is it likely? I don't know. I was actually looking at that this week. I've been doing analysis. If you take a look at previous things, so our chart is similar to where we are right now, where liquidity is similar to where we are right here. And so here the liquidity started moving up. We had the price move up dramatically. And we did have a 10% drop over here, which is why I was calling for a 10 to 15% drop. This is the type of drop I was actually expecting. It didn't happen. And once the price starts moving up, over here we had a drop that was 10%. Again, this is why I keep expecting a 10% drop. So I do believe at some point we're going to be headed back down to our nearest VWAP level, which starting tonight at 8 p.m. will be around the 99.3 level. We'll know for sure what that number is at between 8 and 10 p.m., but around that level, and that would result in a peak to trough 5% down. So I think it could even go as far as to the $95,000 level, a pullback like that. But we can't really bet on that. It doesn't necessarily have to happen. And once we get closer over here, you'll remember, Peter, I was talking about last week that I was expecting a dip around was it May 4th? And then 7 days after that on the 11th. So we did get that dip over here. We got the dip last week where it pulled back down, but it didn't even get down to the weekly level. Like that was what my trade was, to get down to the weekly level. It didn't work. It went back up. And so the next one of those little types of dips will be coming up basically between now and the 16th of May, which would be smack dab in the middle of consensus. So I wouldn't be surprised then if we then get down to 100, 9,500. You really want to wait for these types of dips and moves when you're trading at 50x leverage, right? I know I like to play around and joke around a lot, but I'm not for people just throwing away their money. And if you go, well, Tom, what happens if no dip and it just runs? Well, you should already have your bag, right? You should already have your bag that you're not trading. That's your long-term holding of the asset. If we think that it's going to go to 200,000 now, or $1 million later on, I don't even know why people wouldn't have that bag. You have your bag. The dips here, the 50x leverage, we're just waiting for perfect setups in order to get that. If that doesn't happen, well, it doesn't happen. And then you look at the trade. So I actually haven't taken a bunch of trades now over the last 2 weeks because the setups are just not there. I have my orders that are placed at my VWAP levels. If the price sticks there, fine, I'll get filled. And if that doesn't happen, well, it doesn't happen. Actually, every once in a while, I'll take a 2.5 position short, because the higher we go, the bigger the pullback down. Right? And chances are that somehow we'll get to 80,000. Chances are, not guaranteed. We can end up moving up so high that eventually we mitigate that just as far as the waves are concerned. But if it does happen, well, every time I take my 2.5% trade higher and higher and higher, I have that much more lower that I can go. You know what I mean?
I get it.
So,
but
for the
should we
trades,
be afraid that it goes down low? I mean, we shouldn't be afraid about that, because then you're not saying we go low and then the cycle ends and we go to.
No, cycle's not going to end until earliest is July. We're seeing right now. However, what I'm seeing also is that if we take a look at the dollar, let's just head to our financial conditions. What we're seeing with the dollar here is that the dollar fell below the 100 level. If you guys remember, this 100 level over here is the level that's been like sustained for years and years and years and years. COVID had tried to break above. It fell during the great run up after COVID. We went above it during the recession, and then we bounced along the 100 level, and then we actually broke down. So what we're getting here is that the price for the dollar fell, and then now rose back up to test the 100 level. Why am I talking about the dollar? Because the dollar is the other side of the liquidity, right? When we're talking about liquidity, global dollar liquidity, we're talking about the availability of dollars within the global financial system. Everyone, everywhere, in all these countries needs dollars. Whether you're an individual or sovereign entity, chances are you're coming into contact directly or indirectly with dollars. You're not coming into direct contact with Canadian dollars or Australian dollars or the rupee, right? Generally speaking, but you're going to come into contact with the dollar. And so the lower that the dollar goes, the lower that the DXY, the value of the dollar goes, it means that people are selling the dollar, right? They're selling the dollar as it's going down to buy assets, right? It's always a transfer. You're going from cash to assets, from cash to assets, from cash to assets. So the dollars are going down. People are selling out of that, and that money is going into assets. And we say liquidity is up because the assets are going up, but that's because people are trading the dollars for that asset.
And Bitcoin is an asset.
And Bitcoin is an asset. So when the dollar goes down, generally speaking, assets sensitive to liquidity go up. And that's why we're seeing such a drastic fall. This fall, this break of 100, it hadn't happened I mean, forever since when's the last time it was above? Since here, 2003. You know what I mean? Like, it hasn't happened for quite a while, before the last two crises, in the dot-com crisis. And so this is the confirmation that could be happening, and then we're going to be headed lower, which could propel Bitcoin higher. We don't know for sure. But the reason I'm mentioning that is that if I'm going to be taking a look at the dollar, if this consolidation phase, this is a fake out, like a fake breakdown, and what we're doing is that this oscillation is just going to keep on going for a while, and we're going to have another leg up, and then down, and then up, and then down. Let's say, then this will result in a down of the dollar, of the Bitcoin. Chances are, because if the dollar is going up, that's deflationary. That means there's a demand for dollars, which means people are selling assets and buying the dollars, and then that causes the price of those assets to go down and the dollar to go up, at least the trade weighted dollar to go up. So if that happens, then I could totally expect to see Bitcoin, if the dollar does that and gets back up, let's say to over here, I could totally, which is around 105, I could totally see Bitcoin headed back down to 80. Like, why not? Nothing says it has to keep going up and up, even if the liquidity is there. So we'll see. And the liquidity run up that we've had, part of it is because of the liquidations, right? So we keep taking a look at these liquidation charts. Let me just pull this back here, and you guys can see on the 30-day. This is just spot checking. You guys can go to coinglass.com and look at it for yourself. But essentially, we've been paying attention to see how the levered participants for crypto have been dealing with in the markets. So the short positions for Bitcoin grew as Bitcoin was falling. Those short positions grow because people become more and more confident that Bitcoin's going to go down. So they're placing short bets. And then there was like billions of dollars of shorts versus millions of dollars of longs. And what do I say all the time? Those shorts eventually have to cover. Right? The longs don't necessarily have to cover if the price keeps going up, because a price can go up, a chart can go up infinitely, whereas it can only go down 100%. So no matter what, whenever someone is shorting, they're always taking more risk, because the charts have a propensity to go up and to the right, unless there's a fundamental problem with the thing and you're trying to short it to zero. Some company is going into bankruptcy, something's going to delist it or whatever. Chances are the chart's going to recover. So the shorts are taking more of a risk. And because of that, they're looking to, but the reason they do it is that when you're shorting something, the price moves more dramatically in the short time frame. It crashes more than the price steadily goes up. And so people take those shorts because you can make so much more money quickly. So if that's happening, you get this buildup of shorts, of billions of dollars of shorts, and that means that when they have to cover their positions, either because they're in profit or because they're getting liquidated, billions of dollars go back into the charts. They're selling their shorts, means they have to buy back the Bitcoin from the open market, well, the futures, to cover their positions. They're forced buyers, which is bullish. And so now we're down to the point where if we're spot checking, this number used to be at 4 billion before for shorts. Now it's 1 billion versus 250 million long. And on this other one, you're at 3 billion short, whereas we were at like 10 billion short, if I'm not mistaken, a couple of months ago. So we're still lopsided for the short side. Like, there's still more shorts than there are longs, which is what causes these prices. Whenever you see these gaps in prices like this, right? Forget if there's news or whatever is going on, or what Trump tweeted, or what's happening with the Federal Reserve or whatever. Those are shorts being liquidated, right? These air pockets come in and doom, they get liquidated. Liquidated means that the shorts are, the exchanges that they're short on force their positions to be covered. So you get this zoom, move up in prices and then stabilize because there's an air pocket. So if that's still going on, we still have 2 to 4 times more shorts than we have longs. We can easily get to 120,000 on Bitcoin without breaking a sweat. So if this week we get up to the trend line up here at 116,000 on Bitcoin, I would not be surprised at all. In fact, I'm long right now, and I only take occasional shorts depending on what the price is. I'm ready to turn my position short, though. I would love to write this down to 80,000, but then I'm a doomsdayer. And I like when the charts go down, because that means I have an opportunity to go up later. So all right, so those are the trades that we saw last week. Are essentially the price moved directly to our VWAP levels, but I didn't call out any trades. It's nothing really to call out. You can trade these levels if you want, but unless we get perfect entries, that's not our style. For the week coming up, we're looking for potentially Bitcoin getting to 116,000 as more of the shorts get liquidated. But I would not be surprised that we head down lower, because we don't have any more VWAP levels, unmitigated VWAP levels above us.